Hello, YouTube. Today we got big red on the S&P 500, where initially we went up by about 1%, but ended up closing down by 2.5%, and the Qs closed down by 3.5%, or nearly a 5% swing intraday. Today's video is sponsored by the color red. That's right, my old friend, Mr. Red. Everyone gets a little bit of shade of red. So what exactly did the Fed say? Why did we go down? And where do we go from here? That's what we want to answer in today's video. Encourage you to smash a thumbs up and subscribe to the channel if you want to see more videos like this. And we always appreciate your support. Thank you so much. So with a lot of red here on the screen, what really happened? Well, Jerome told us that it is premature to think about a pause. It is premature to think about a pause. So what that means is that the market initially had a knee-jerk reaction where on the 30-minute chart, we got our nice bullish move. So we get a big old bullish move here, and then it fully pukes up. That is where the market interpreted what Jerome said, not the way he wanted. We went from 380 to about 387 in a hurry, nearly instantly, and then gave it all back with a failed breakout on the 15-minute chart, but also on the weekly chart. So the notes for me were very obvious today, and I can understand what is happening. Yesterday, we talked about how there was a coil getting tight, and the pressure got released today by us going down. The question is, where are we? Well, if we look here to our weekly chart, we note that, oh, wow, we actually have a higher high and a higher low. That's correct. We have a higher high and a higher low. Why would that matter? Well, that's bullish. And we defer back to the previous candles. Low, higher, low, higher, low, higher, low, at least for now. Then we got high, higher, high, higher, high, higher, high. That's 4 weeks in a row. That's part of my bull thesis. Again, if you want to see everything for my notes, you can click on the link in the description. And I have an actionable plan that I laid out going into today, which I will review in a few minutes here. So whether it feels like it or not, we're actually just back testing support. We initially paused here at about 279.45, which is a really important area. As a reminder, that is our high from October 22nd, which was the previous October high. It's also where we have our Fibonacci retracement at 380. So that's like where when we didn't hold it here on the daily chart at 380.54, or the green line going back to our May low, that's where you don't go chasing waterfalls. That's where we went a lot lower. Everything went red. So that's really what it was. Very early into the press conference, the market already got the clue. Jerome wants us down, not up. And then he put a nail in the coffin here. One thing I would notice that there was someone in the audience who said, "Hey, Jerome, the stock market's actually going higher and bonds are moving up in reaction to what you said." And he started giving us the greatest hits on all the hawkish reasons why we should go down. So for some reason, people still want to fight the Fed. And that is why there was a huge humbling that happened on that 30-minute chart we looked at just before. Whatever gains went, oh my God, they were wiped out. And this same pattern here, this failed breakout, which ends up becoming a bearish engulfing candle, is the same one I am looking for on my weekly chart. So if we're on strong support now and we got a huge negative reaction to kick off November, what was the other reason why? Well, then we got more context here. How far to go on rates is the important question, not how fast are we going to raise, but how far are we going to go? And we're going to look at two more things here. So there's still ground to cover to get there. What does that mean? Higher for longer, read between the lines. The data suggests we may ultimately move to a higher level than we thought at our September meeting. What this means is that they're giving us an update. However, they only provide updates at certain meetings. So now we're going to look at the federalreserve.gov or FOMC schedule for the year. Here we got our 2022 FOMC meeting schedule. I want you to pay attention to the ones that have the asterisks. That's going to be March. That's going to be June. That's going to be September. And that's going to be December. Because what Jerome said here was that data suggests we may ultimately move higher than levels we thought at our September meeting, which means we're going to go higher than what we thought the last time we gave you an update, or a summary of economic projections, that SEP Jerome keeps talking about. So the plan is to go to 50 at December, but they're going to have to justify that by providing a new summary of economic projections, which is going to include the payroll Friday we're going to get, CPI next week, and all of that good stuff. And this is not very far from here. November 1 to 2 to December 1 to 14, 13 to 14. That's like 6 weeks away. And that is where our bear market bounce is expected to be done. Why? Well, in 2008, it was a Fed cycle that got us down. It looks like the same thing's happening in 2022. Next thing here. So if we understand what the market told us, not did it tell me what I wanted or make the lines go up if I'm bull, but did I understand what happened? Well, the market did. Futures imply traders see 57% chance of Fed raising by 50 basis points in December. Before, they were leaning on 75 basis points. Now it's back to neutral. Jerome now has some optionality. And this is so important because optionality means that if inflation goes, so like right now, inflation's at about 8%. We have interest rates here at about 4. So there's still a huge gap here. We have to see we have to see inflation come down or interest rates to go higher where inflation is actually above. Interest rates are above inflation to drag it down. And right now, that's not what we're really seeing. So if inflation's not going to come down, the Fed has to go higher for longer. That's what it means. So we're now back to basically neutral on whether it will be 75 or 50 in December. We just told you why that's an important meeting. Then we look at fear and greed, right? Punch right back to neutral. Exactly dead set on neutral, which means it's up to the bulls or the bears to prove their case and move the chart now. Just like last time, we went from about 18 to 60, 18 to 60, and then down. Oh, crap. Yep. That might have been the end of the bear market bounce. There might be more in the tank. That's what we have to pay attention to for the rest of the week here. So what it really comes down to is, are we going to defend that 373 area? We still got 2 more days left. It's only Wednesday. So I think we're going to lose it, but I think we're going to recapture it and then move higher next week. The last time, again, looking back to March, which is when we had this move back above the 50, right? Had a little bit of a rally, then lost it. What's more important now is that we have 1 day back below the 50 DMA. We talked about the reasons why QQQ dragged us down yesterday. Encourage you to watch that video if you want to know more. But as of right now, volume is elevated, but it's not as high as the last 2 bars. So we kind of defer back to that neutrality. And I would say that into tomorrow and into next week, I really want to see what happens with the daily and weekly highs and lows. So I'm not going to tell the market what it's going to do. I'm ready to react. One reason why I'm ready to react is because today there was a plethora of massive dollar big bear bets. Meta, Amazon, right? Baba, Meta, Airbnb, right? Amazon, Tesla, right? All these companies, QQQ, every single, like we got 175 million bucks here, 167, 160, 100, 90, 85. All these orders are massive. So even though the put flow is, again, it's 1.8, which means there's roughly twice as many puts bought for calls. The size of these is huge. These bears really want to take it down. So we'll see who's in charge. Now we're going to look at the notes for how we got to here. And just before I do this, the point here is to illustrate that there is a way to know. I think a lot of people today are doing the shoulda, woulda, coulda. Should have done this, woulda done that. Right? Shoulda, woulda, coulda. Could have done this. Oh, well, I could have made money today. Yeah, but if that's what you're doing, you're focusing on what you don't want from the market. You're telling the market what you don't want. Focus on what do you want? Why do you show up for work? Why do you trade or invest? Is it to work for your money? Is it to make your money work for you? Is it to build a skill which can replicate wealth over time? Or is it to gamble? Figure that out. If you're really disappointed today, that's likely a root cause of your issue. So now what I want to look at is, even though I had my notes prepared, I had my plan of attack, I had my big order ready, I still got gun shy on the third part here. And that's because even with all the prep, even with the right risk reward, it can still be sometimes hard to pull the trigger. So I made money today. And for me, it was more important to understand that if I deplete my mental capital right now, I'm not going to be receptive to the next move. Is it going to be down? Is it going to be up? Is it going to be flat? But for me, and our algo, again, link in the description if you want to know more, it is super, super, super obvious to me. So ask yourself if in hindsight, these notes now make sense. And like I said, there is a lot more notes to this. I'm just going through my ES trades specifically. And this comes from my weekend deep dive on Saturday. After I record the video, I prepare notes for a group. So now let's pull these 2 charts up and we'll read them over and see whether or not what happened, because I'm going to make an updated plan tonight to trade tomorrow. And that's just what I like to do. I like to make a plan of attack and then I assess or react to what happens. So at the time, this is when we were at 38.60. Now we're at 37.70. We're a whole bunch lower, right here on strong support. I don't think people are aware of that. We came right back down to my strong support area. So now that we're here, what happened to get us here? Well, it's that the market wanted to hear a bullish narrative, initially latched onto it, and then they got punched in the face. Like Mike Tyson says, everyone has a plan until they get punched in the face. So for me, what works best is preparing something on the weekend and then just actioning my plan. We are bullish over 39.25 to 39.40. We are bearish under 39.10 to 39.25. That basically goes back to the high from last week and over here to the high, which is 39.36. And then yesterday, just after the market opened, about 30 minutes, I was looking for this specific pattern. I called it out. Again, you can join us in our group if you want to know more about this or see what I'm going to do tomorrow, or come trade with me. Any one of those things, or get access to our algo. Again, link in the description. Weekly failed breakout setting up. Watching for data into this hour. That's when we got that ISM data. That's what really took us down yesterday. Has to hold into close of this hour and should be the start of a move, which we can position for. So we have time. Just an FYI, these are notes. I'm ready to react to the data and action plan after assessing. And then here I talk about how this is yesterday again, just before lunch. Levels are on the chart. We now have a clear level for the monthly bulls have to break at 39.30. And on our knee-jerk higher today, we didn't get there. We got the 39.07. So we got basically to the area I was looking at here between 39.003 and 39.25. That's where those levels came from. Weekly failed breakdown. The knife catch was entering before 10 a.m. and we were already below the bear areas of 39.10 to 39.25. The next trade was 38.70 and the easy trade was 38.50. So all this means is that there is a way to gain an unfair advantage in the stock market. And now that we got those notes, I'll give you a quick preview of what I'm looking at here. So now we note that, okay, well, we're below the green line. We've got a huge rejection lower, and we're right at the weekly low. So that's what I'm really going to be watching for. What happens at 373, 373.88? I know that area as well. It's 2020 close. What's going to happen? Can we get back above 375 like we are in after hours? Are we going to dive lower? I don't know. Also, we only got 1 day back below the 50 DMA. I would want to see 2, including tomorrow, for us to signal that there is now upside resistance at that 380. As of right now, if this was the opposite move before tomorrow, we should be able to get back through that. Yeah, I know that seems like a big, tall task right now. We can get there. QQQ. This is the one that concerns me a little bit more. And we talked about how we were not above our 50 DMA. We actually rejected only on the downtrend twice. Didn't make it up to the blue line or the 50 DMA, currently at 283.74. So now that we took this Q to go lower, we blew through the low at the open. That was your clue. The bears wanted it. They took advantage of the liquidity to go higher to sell the hell out of it. Volume here is on par, not as high as our capitulation low though. And we're almost back to our inverse head and shoulders. Could still technically be one if that's our goal. But when we look here to QQQ on the weekly chart, this is where the NASDAQ is dragging us lower. It's not pretty. We're below our 200 weekly. We're below our 50 monthly as of right now. We're negative 4.5 on the month so far. An inside bar, we're below the October open. This is not pretty. I don't know exactly where we're going to go from here, but I think that today I showed you that we're now back to neutral from a pricing on the Fed perspective. We're also neutral from a risk reward perspective and right back to strong support. Who wants it more? Do the bears want to keep selling? Are they going to start covering? Watch the video from the weekend to see how we got to here. And if you want to trade with me, click on the link in the description. Thank you so much. Look forward to seeing you tomorrow.